I would buy this. Silver below 70 right now is a gift. Gold is not as big a gift. Real support is around 4,000, 4,100. Gold was down 3.3% today. Silver was positive until today, and now it's negative. It closed below $68. I think it was $67.72. Inflation is rising rapidly, and the Fed is sitting on its hands. The real flows, the real money that's buying gold and silver is going to buy this dip, right? They're not trading with these programs. They're buying to own the assets, and they're going to keep buying because everything that's happening right now is bullish. Donald Trump is hanging everything on the stock market. All he does is talk about how high the stock market is when it sets a record, claiming credit. This proves my economy is great, my policies are working, and there's going to be tremendous amount of pressure on the Fed. What can the Fed do to bail out the stock market? They got to print money. They got to cut rates. This is the support right here in silver. I don't think you get silver much cheaper. I don't think we're going anywhere near 50, which was the breakout. Even if it's a correction and not a bear market, there should be a lot more coming. We'll see what happens on Monday. Gold was down 3.3% today. Right? It was down about $145. It closed at $4,328. Right? Gold, on the year, gold is about flat. It may be, I don't know, if it's slightly down on the year. But silver was down 8.7% today. Year to date now, silver is down. Yeah, gold is down about 0.5% on the year. I wrote it down. Silver is down 6.4% on the year, meaning before today, silver was still positive on the year. And unlike, like Bitcoin, which is way down, silver was positive until today, and now it's negative. It dropped just over $6 today. It closed below $68. I think it was $67.72. And again, catalyst being the stronger than expected jobs report, which is meaningless. But again, the computer algorithms in a liquidity-driven market, they sell everything that they believe is related to interest rates. A stronger than expected jobs number, that means the Fed can't cut rates. That means the Fed might hike rates. All of this is irrelevant because inflation is rising rapidly and the Fed is sitting on its hands. The Fed is not going to start hiking rates, and even if it did, it would be too little too late to do anything on moving the needle on real rates, which are collapsing. All of this is bullish for gold and silver, just that those algorithms haven't been programmed to understand that yet. But ultimately, and not too far into the future, that is going to happen because the real flows, the real money that's buying gold and silver is going to buy this dip, right? They're not trading with these programs. They're buying to own the assets, and they're going to keep buying because everything that's happening right now is bullish, which is why I would recommend, this is a great weekend, by the way, to buy gold and silver. I think we could potentially have a big drop in the stock market on Monday, unless the Trump administration does something to prevent it. But anything they do to prevent it is going to be very bullish for gold and silver. But even if they don't prevent it, this sell-off should turn. The money should start flowing into gold and silver, because what does a big drop in the stock market mean? It means the Fed is going to have to rescue the market. Of course it will. There'll be massive pressure from Trump on the Fed to do something because Donald Trump is hanging everything on the stock market. All he does is talk about how high the stock market is when it sets a record, claiming credit. This proves my economy is great, my policies are working, and there's going to be tremendous amount of pressure on the Fed. What can the Fed do to bail out the stock market? They got to print money. They got to cut rates. And all of that is great for gold and silver. So I would buy this. Silver below 70 right now is a gift. Gold is not as big a gift, but it's still, well off the highs. It was over 55, almost 5,600. So we're just barely above 4,300. The real support is around 4,000, 4,100. This is the support right here in silver. I don't think you get silver much cheaper. I don't think we're going anywhere near 50, which was the breakout. So it's a great weekend to go to Schiff Gold and buy some gold and silver. If you don't have your T-Gold account yet, go to tgold.com and buy some gold and silver. By the way, Bitcoin has diverged from both risk assets and gold and silver, because gold is basically flat on the year. The NASDAQ is still up almost 11%, and Bitcoin's down 30%, right? So Bitcoin is going in its own direction. It's not correlated really to the risk assets anymore. It's not correlated, or never was correlated, to gold. It's just going down because the air is coming out of the bubble. Another thing I wanted to talk about today. So earlier, I don't know if it was before, I think it was before the markets opened or yesterday, Donald Trump came out and he talked about Fannie and Freddie. And he said that they're worth $1 trillion. These companies are worth $1 trillion. And of course, a lot of people own them because they expect some IPO. And Trump says they're worth $1 trillion. Right? Now, that is about 4 times what analysts claim that they're worth. And of course, they're not even worth that. I don't even think they're worth anything. And in fact, one of the reasons that I think Trump might have been wanting to come out and say that is that Bill Pulte, right, who is running Fannie and Freddie basically, he's now got him in charge of national security, right? And even though he has no experience and knows nothing about it, that's the guy that Trump picked to replace Tulsi Gabbard, who's leaving at the end of the month. Now, of course, a lot of people are upset that Trump is putting his henchman in charge of national security, and who knows what he's going to do with it, because, we know how, he was using all these mortgage records to go after, people on the Fed. Who knows what he's going to be doing with all the national security information. But Trump has appointed him just as an interim head because he knows he can't get him approved. Because if he actually tried to give him the job, the Senate wouldn't confirm him. So he's allowed to appoint him as an interim head, and he can do the job for over 200 days without having to be approved. So now Trump gets to put his buddy there to dig up some dirt. But meanwhile, that probably scared some of the people who invested in Fannie and Freddie. Hey, our boy is going to be doing something else. That means this, maybe we're not going to get this IPO. So the stocks were coming down. So then Trump comes out and says they're worth $1 trillion, and they jumped way up on the open. Of course, they sold off from that gap. I wonder how many of Trump's friends knew that he was going to say that or post that before he did, and they got long and they sold into the rally. But the stock still ended up closing positive on the day. But the reason I say that the companies don't actually have any value, Fannie and Freddie insure like a third of all the mortgages in the country. That is a huge liability. It's not an asset because you insure all these mortgages. That leaves you on the hook. Now, their asset is, well, they've got cash, they've got some a capital, but ultimately, if we have a big drop in the real estate market, which looks inevitable given the housing data and given how expensive housing prices have never been this expensive ever, even before the housing bubble popped in 2007, 2008. Houses are less affordable now than they were then. And Americans are deeper in debt. Their financial position is worse. So ultimately, we should have a bigger decline in home prices than we did then. And it's more than enough to wipe out all of the capital that Fannie and Freddie has. So in other words, they're not worth anything. And they're never worth anything to the government. Donald Trump wants to pretend, oh, this is this $1 trillion asset that I helped create that we can take advantage of through an IPO. The government is the reason that Fannie and Freddie exist, because the government is standing behind all the debt. Well, the government doesn't even need Fannie and Freddie to stand behind mortgage debt, right? Fannie and Freddie could just be government agencies like the FHA. They don't have to be these separate companies. Does the FHA have all this value because it guarantees mortgages? No, it's a liability. It's not value. The only reason Fannie and Freddie have value as private companies is because the taxpayer is on the hook for the losses. That is the value. The value was the implied or implicit guarantee that Trump wanted to make explicit, that the U.S. government stands behind the company. So it was socialize losses and privatize gains. That was the value in the private market, that you had a monopoly on issuing or insuring mortgages with a government guarantee. But to the government itself, Fannie and Freddie have no value. That's all nonsense. It's just the government guaranteeing debt. Like the student loans. Look at all the student loans that the U.S. government guarantees. Is that an asset to the government because it's guaranteed, all these student loans? No, it's a liability. We're all on the hook. When all these student loans go bad, we got to pay for them. And in fact, Fannie and Freddie underpriced because of the government guarantee. The risk is underpriced. They don't have nearly enough capital to withstand the type of losses that we're going to have. That's why they went broke the first time, because the government guarantee, even implicit, allowed them to insure mortgages without accurately pricing them. I mean, normal insurance companies, life insurance companies, property insurance companies, fire insurance, all that, they're pricing the risk accurately because the government doesn't stand behind them. The insurance companies are underwriting their own risk, and they're pricing it right. And so the premiums are designed to provide the insurance companies with enough money. And if they don't, they have reinsurance. There's an entire industry that works. But when the government comes in and says, hey, we guarantee it, then it screws up the free market. You don't get an accurate pricing. The price is too low. Companies that are getting insurance on mortgages are getting it too cheap. That is the so-called value created by Fannie and Freddie, is that it allows mortgage insurance to be underpriced, which means mortgage rates are lower than they otherwise would have been had they been accurately priced. But you can't say that creating that is an asset to the U.S. government. It is a liability to the U.S. government. Fannie and Freddie is not this $1 trillion asset that the U.S. government owns. It is a massive liability. It's exposure for the U.S. government. It's not an asset. It's all fiction. It's fake, right? But Trump wants to pretend that we're rich because we've guaranteed all these mortgages. No, because we've guaranteed all these mortgages, we're going to go broke, right? We would be better off if we didn't guarantee any of these mortgages. The U.S. government would be in better fiscal shape if it wasn't on the hook for the mortgages, if it wasn't on the hook for the student loans, if it wasn't on the hook to make Social Security payments and Medicare payments and Obamacare payments and government pensions. Does Trump think all those obligations somehow represent assets to the U.S. government? No, they're the liabilities. They're the unfunded liabilities that are part of the $100 trillion plus real national debt that the United States has, right? The 39 point whatever trillion is the tip of a huge iceberg. But anyway, I think all these forces seem to be coming together. The dollar rose, the dollar index back above 100. Again, the stronger than expected jobs report pushing the dollar. But this is also going to be putting pressure on the yen, on the South Korean won. I mean, look where these currencies are. That's going to be putting pressure on the Bank of Japan, on other central banks, the Korean Central Bank, to intervene in the foreign exchange markets and start selling dollars, selling treasuries at a time where we can't afford to have anybody else sell treasuries when we've got to sell so many because we already have so much debt. So there are so many things. Murphy's Law, anything that can go wrong will go wrong. Well, I have a corollary. I think everything that can go wrong will go wrong at this point because there are so many things that can go wrong. Yet we had a stock market that was priced for perfection, for nothing going wrong, when in fact everything might go wrong because that's how vulnerable the position that we are in right now. And the only real safe haven from the stock market, from the U.S. bond market, I think is going to be gold and silver as the safe haven. But look what happened to value stocks today. If you look at the names that we own, not the mining stocks, which got beat up, but a lot of our defensive, dividend-paying value stocks actually had solid gains today. Even as the market was bleeding red, a lot of these companies were up 2, 3, 4%. Those are big gains. Now, not big enough to offset the even bigger declines in the mining stocks, for example. But it's a good sign to show where the money is headed, where the flows are going. What is the transition, right? It's a rotation out of momentum and hype and speculation into value and dividend payers. And that is our strategy. That is where we have been investing the whole time. We've been staying away from the high flying momentum stocks, preparing for the air to come out of the bubble. But at the same time, we've been investing in quality dividend paying value stocks and combining that with EM exposure and precious metals exposure. So right now, it's the precious metals. EM is getting hit with the sell-off in risk assets, but this is really a whole new ballgame. These are not the risk assets. They're going to be where the risk capital is going to rotate into, because this is where you have real investment value. And ultimately, when the dollar really gets hit, which it's going to do, the reason that you're still seeing weakness in those stocks and in precious metals is the dollar strengthened. But the big move for the dollar is down. When Forex traders figure out the box that the U.S. is in, the amount of money the Federal Reserve is going to be forced to print to stop long-term interest rates from soaring and to prop up the stock market. Who knows? They may even have to prop up the crypto market. I mean, maybe Trump is going to have to announce that we're going to print a bunch of money to actually get the strategic Bitcoin reserve going. I hope he doesn't do that, but I know there's going to be a lot of pressure on him from his donors, probably from his kids. His family business now is going down the drain unless Trump could do something to plug up the hole. But there's going to be all this pressure, but what it ends up doing is causing money to flow into precious metals as real safe havens, and these mining stocks are a great buy right now. They're not the type of risk assets that should be sold. They're actually the one type of risk asset that needs to be bought, because the risk reward is so asymmetric, in my opinion, for these stocks that the amount that they could go up and what I expect them, or how much I expect them to go up, dwarfs how much I expect them to go down.